Welcome back. We're still looking at functional budgets, but this question is going to be more complicated, where we won't just prepare the sales budget and the production budget, but we'll move on and look at our raw material budget in quantities, and then material purchases, what we're actually going to buy. We'll use our production detail of units to work out how much labour do we need, given the rate of pay, what the cost will be, and then pull in all that cost information into a production cost budget. In the question, we've got a lot of information that we've been given. We're looking at Blocksit Limited, producing one product, the Bloxy. We've got the information about materials and labour. Material A, material B, and direct labour is £8 an hour. Our fixed overhead absorption rate is £10 per unit. That goes back to last term. We looked at the overhead absorption rate and how it was calculated. We're now going to apply it in a budgetary situation. We've got our forecast sales, July, August and September, with a selling price. And then we've got our opening and closing inventory information for finished goods and for our raw materials, A and B. The requirements, quite simple. Sales budget in quantity and value. Always watch out for that in questions, because you might be asked to do that quite separately. Those are figures that you won't necessarily use again in your calculations. So our sales units will then be used to produce the production budget, and those production units will give us our material purchase budget and our labour budget. The material purchase budget, those figures will then be used to work out how much we're actually going to buy. All of those figures will then be pulled together into a production cost budget. So we're going to start with sales. With our sales figures, we've got our unit price of £80 per unit. We can then use that to work out the value of sales each month. July, £960,000. August, £1 million. September, £968,000, and in total over the 3 months our sales revenue will be £2,928,000. So in this part we've calculated our sales value, our sales revenue, and we've got the sales quantity which we'll need to use when we move to the next stage to prepare the production budget. Now the production budget is in units, and we're looking at finished goods. So the first thing we put into the production budget is our sales units. These are the figures that were given to us in the question and we used in the previous part. 12,000 units in July, 12,500 in August, and 12,100 in September. Those are the units that we need to sell. That's what our customer demands. But that's not necessarily what we need to make. Just as in the previous recording, we need to adjust those quantities for our opening and closing inventory requirements. And that will then enable us to work out how many do we need to make to satisfy customer demand and to make sure that we have sufficient in stock to deal with any contingencies. Our opening inventory was given to us in the question. We're now going to use that opening inventory figure in a working to calculate what our closing July inventory is going to be, and that's going to add 10%. which will be 6,600 units. We can then work out our closing August. Again, add another 10%, and that will come to 7,260 units. And our closing September, we're going to add another 10%, and that will give us 7,986 units. Make sure you understand how those calculations were made. Please practice them with your calculator. We can now put those workings into the pro forma. So we have our closing inventory for July, and that will become our opening inventory for August. Our closing inventory for August becomes our opening inventory in September, and we have the closing inventory at the end of September. To work out production, we do exactly the same as we did in the previous video. We think about what do we need to make. We need to make enough units to satisfy our customers and enough units to give us our closing inventory. But we don't need to make our opening inventory, it's already there. So we can then add up our figures, closing inventory plus our sales units less our opening inventory will give us our production figures. So we've got our numbers of production that we require for July, August and September. The total column I would do at the end, because it's very important that you remember that this total is for 3 months. Our units that we need to sell, 36,600, that is July plus August plus September. Our opening inventory right at the very start of the period, and our closing inventory is right at the end of the 3 months. And our production, 38,586 units. Those production figures that we've just calculated will then be used to calculate how much material usage we need, and we'll start with material A. So our production budget we can transfer into the calculations for how much material A we will need to produce our production units. In the question we're told that there's 2 quantity per unit, that's kilograms, and our material usage in kilograms, multiply it out, 25,200 kilograms, 26,320 kilograms, 25,652 kilograms, and in total 77,172 kilograms. So that's how much materials we need to use to make our required production. I'm going to then use that figure to work out how much I need to buy, and I'm going to do material A in one fell swoop. So we've just calculated that our usage for July, 25,200, kilograms. August, 26,320 kilograms. September, 25,652 kilograms. In total, 77,172 kilograms. I now have to work out how much I'm going to buy. So I'm going to work out my purchases in units, which is in this case kilograms. And for that I need to take into account my opening and closing inventory. My opening inventory on the 1st of July is in the question 7,000 kilograms. The question then tells me that my raw material inventory should increase by 100 kilograms each month. Now this is much simpler a calculation, so I'm not going to do a working, but I am going to say that that's going to be plus 100, and then hopefully a marker will understand what I'm doing. So my opening inventory in August, 7,100, closing 7,200, and then 7,300. Just like we did before, on our total column, we're looking at 3 months. So my opening is going to be 7,000 kilo, and my closing is going to be 7,300. To get to my units, my kilograms that I need to buy to actually make enough units and to have enough closing and closing stock of material A, I don't need to buy my opening stock. I already have it. So what I need to buy is enough kilograms for my usage and to supply my closing stock. So my purchases is going to be 25,300 kilograms, 26,420 kilograms, 25,752 kilograms. In total, 77,472 kilograms. The question gave me a purchase price, and the purchase price was £9 per kilo. So I'm going to have to buy, in pounds, 227,700 pounds worth of material A in July, 237,780 pounds in August, 231,768 pounds in September. So in total, that's going to be 697,248 pounds. So that's material A dealt with. I then have to go and have a look at material B. Do exactly the same thing. So for material B, I know what my production budget. Go right back to the production budget. For July, my production budget, 12,600 units. This is in units. In August, I had 13,160 units. And in September, 12,826 units. For material B, I've been told that I've got 3 kilograms in a unit. I can now multiply it all out. 200, oops, we have 37,800 kilos in July, 39,480 kilos in August, 38,472 kilos in September. For the total, we add up the total of the production budget, 38,586 units multiplied by 3 kilo, and that will give us 115,758 kilos of material B. So that usage for July, August and September we now are going to use to work out material B purchases budget. So I'm going to put in those usage figures, 37,800, and this is kilos for July. We have 39,480 kilos for August, and for September we've got 38,478 kilos, and in total we had 115,758 kilos. Our opening inventory, we've been told in the question, is 8,000 again. Remember, these are kilos. 8,000 kilos, and we add 100 kilos as per the question, 100 kilos to make our closing inventory. So we can finish off just like we did with material A, and then in total we've got our opening inventory 8,000 kilos, and our closing inventory is 8,300. There is an error in the workbook that the total is 8,300. We can now calculate our purchases just as we've done so many times before. We're not going to need to purchase our opening inventory. We already have it. So all we need to buy is enough for our usage plus our closing inventory less our opening inventory, and that will give us what we have to buy in kilograms. 37,900 kilograms in July, 39,580 kilograms in August, 38,578 kilograms in September, and in total that will give us 116,058 purchases in the 3 months to the end of September. We can now move on away from purchases and look at the labour budget. So the labour budget, we go back to put in our production figures, 12,600 units. Right back to the beginning, 13,160 units, 12,826 units in total, just as we had right back in the beginning in our production budgets, 38,586 units. The question tells us we have 3 hours per unit, and so we can work out our total production hours, 37,800 hours for July, 39,480 hours for August, and 38,478 hours for September. For the 3 months, 115,758 hours. We can now work out our cost. We were told in the question that we're paying our workforce £8 an hour. And so we can work out our labour value. This now will be in pounds. £302,400 for July, £315,840 for August, £307,824 for September, and in total for the 3 months our labour costs will be £926.64. So far we've worked out our production budget, our material A, material B budget, and our labour budget. And finally, what we want to do is pull it all together to produce our material cost budget. So our material cost budget is what we're going to use to make our production. It's very important to note that we're going to do usage. It's not what we're going to buy, it's what we're going to use. So we're going to multiply our usage by our price. So for material A, our usage, and let's just do this one for you. Material A, we have a usage 25,200 kilos is what we're going to use to make our production. And we're going to multiply that by £9 a kilo, and that will give us £226,800. We can do exactly the same for August. And for August, we'll take 26,320 kilos times 9, and that will give us £236,880. September, we have our usage for material A, 225,652 kilos times £9, and that will give us our usage of £230,868. In our production budget, we actually calculate the cost of the materials we used for production. So we can put these figures in. You will have workings for all of these figures, for the material A and material B. So we're going to put in our calculations that we've just worked out. And then for September, the 230,868, and in total, if you add those up, 964,548. So for material A, we've got all our figures in our production cost budget. You do exactly the same with material B and you'll have exactly the same working. Looking at the usage and going back for material B, we have our usage previously for material B 37,800 kilos for July. We multiply that by our cost of £11. So we take the usage multiplied by £11, £415,800. For August, £434,280. For September, £423,258. In total, £1,273,338. The labour budget is much easier to put in because we don't have the complication of our opening and closing inventory. So for our labour budget, we can slot in the figures that we calculated above. So to make our production in July, it's going to cost us £302,400. August, £350,840. In July, £307,824. In total, £926,064. That will give us our prime cost. Add them up. Remember, just as we did last term, our prime costs are all our direct costs. 948,000, 987,000, 961,950, and £2,893,950. So that's our prime cost. Our overheads were quite straightforward in the question, £10 per unit. We know our units, so our overheads are going to be, for July, our units that we're going to make are 12,600 multiplied by £10, £126,000. So our units multiplied by £10. So for August, it's going to be £131,600, and for September, £128,260. In total, if we add all our overheads up, £385,860. So now to finish off our production cost budget, we take our prime cost, add our overheads, and that will give us our production costs. £1,071,000 for July, £1,118,600 for August, and £1,090,000, £210 for September. For the whole 3 months, the total cost £3,279,810. And there we've completed our production cost budget, which brings together material A costs of usage, material B costs of usage, labour costs, and we add in finally our overheads. Thank you.